Hello everyone, welcome to the tutorial series of Python language quantitative trading practice. In this lesson, we will learn how to add a trailing stop profit and stop loss function to a strategy. In fact, in the previous course, we have learned an exit function, strategy.exit, in which some parameters can be used to set the function of trailing stop profit and stop loss. Let's take a look first. Because the function of adding a trailing stop profit and stop loss function to a strategy we want to design is to be implemented by the function strategy.exit. First, let's review the function strategy.exit. Here I have written all the details and codes of the implementation of this strategy in our Python language introductory tutorial of FMZ Quant on our platform. We can also find relevant codes in the tutorial, and we can directly find the last one, tracking stop loss and take profit. In the last strategy example, we added an update here, and we mainly use the exit function of strategy exit long position to realize the function of trailing stop profit and stop loss. In the previous chapter on functions, we did not further discuss the profit stop and loss stop functions, and these parameters were not further discussed in this course. We'll give a brief description of these tracking profit stop and loss stop functions of the function. We can copy the test code of our function directly here. And paste it in our strategy library here. And save it. The test code is written at the beginning of this chapter. We copy the test code and then we test it in our backtesting system directly. The exit function tracks the profit and loss stops. It should be noted that we need to set it to the tick model during backtest. Here, tick model. Because if it's set to bar model, it will only be executed once at the closing time, and the prices may have changed greatly at the closing time. So generally, when we use the tracking stop gain and stop loss functions, we need to monitor the prices in real time. So we need to set it as tick model here. Okay, we click backtest. It will take a period of time. We omitted the backtesting. The backtesting time here, and we can see that the drawing function in our code, in our strategy code, is output on the chart here. So let's go back to our strategy code page. Here we can see that the function strategy.exit has three parameters: trail price, trail offset, and trail points. What are their specific uses? We can Take a look at them one by one. The first parameter, true price, is used to set the price triggered by the tracking stop gain and stop loss functions. That is, the tracking stop gain and stop loss functions do not mean once the function strategy exit is executed, it starts immediately. It needs to be triggered, that is, when the price reaches this level, the function of tracking profit stop and loss stop will be triggered. Therefore, this parameter is used to set the trigger price. It is a specific price value. The second parameter is true offset. It is mainly used to monitor the maximum or minimum price after the tracking stop gain and stop loss functions are triggered. If your position needs to track the stop gain and stop loss positions, and if the bottom position is a long position, it will monitor the maximum price at this time. If it is a short position, the lowest price will be monitored. That is, if the price is withdrawn. The distance from the highest or lowest price exceeds the trail offset. The position will be closed immediately to stop the gain. The parameter of trail offset is not a price unit. It is a parameter in points. That is, for example, if we set it to 30, it does not mean that the position is closed when the price is 30. It is in price points, that is, the minimum price change unit. The following parameter, trail points, which has the same functions with trail price basically, except for trail price is expressed in terms of specific price, while trail points are expressed in profit points. That is to say, when the current tracking profit stop is triggered, if the profit has been made for 30 points, for example, we set the trail points to 3, which means that it has made profits for 3 points. At this time, it starts to track the profit stop operation. So trail points and trail price is to set the trigger position of the line trigger line for tracking the profit stop and loss stop. But one is expressed by price and the other is expressed by profit points. Now that we know the purpose of these 3 parameters, let's move on to our code, in which we use fixed price to set the positions that trigger trailing stop loss and stop profit. First, at the beginning of the strategy, as long as the strategy runs to the real-time bar stage and no transaction has been made, we set an is trade tag to determine whether the logic has been executed. Why do we do this? We only execute it once for the purpose of demonstration, and do not let it be executed continuously. If we do not design it in this way, it will continue to go long, and then track the stop profit, which is not convenient for our observation. So we set such a tag so that the logic can only run once and no longer be repeated. At the beginning, we let the strategy execute a going long order operation. We placed an order with the label test1 here, followed by the direction of going long. And the order quantity is 1 here. We executed the operation of opening long positions. Then we set exit plan commission immediately. Name it as exit 1. The long position corresponding to our plan commission is test 1. And after we set the trail price and trail offset parameters, we assign the value of each trade to true. That is, after one execution, the logic execution will not be repeated next time. We only let it demonstrate once, then we will draw its trigger line, as well as the line of the current highest price, as well as the specific trigger closing position line of moving the profit stop and loss stop. We can observe these results during backtesting. We can see that when backtesting starts, this red dotted line is the time when the strategy starts to run and enters a long position immediately. Then with the upward trend of the price, when the price crosses over the yellow line, that is, it reaches the true price trigger line. The tracking profit stop operation of test 1 position is triggered at this time. At this time, we can see that the purple line appears. It is always based on the highest price after the current trigger. That is, it always records the value of the highest market price after the trigger, and then adjusts its profit stop line dynamically according to the highest price value, that is, the blue line. We can see that the blue line and the purple line is always keep the same distance of dynamic adjustment. When prices continue to rise, the profit stop line will continue to rise. When the price starts to decrease, if it crosses below the stop profit line, it means that the profit stop operation is triggered and all positions will be closed. It can be seen that when the profit stop operation is triggered, there is actually a certain profit from the position where the position is opened. That is to say, after the backtesting, we can see that the intrastate operation is profitable. This is a simple intrastate function for tracking stop profit and stop loss. We use the strategy.exit function to achieve this. In addition, there is an original article on our platform that also describes this function and focuses on function strategy.exit. Created a semi-automatic trading tool, that is, write a semi-automatic trading tool by using the Pine language here, and then made it into a strategy. So when we use it, for example, if we judge a good entrance position manually, then we want to try to enter in this place to go long. Of course, if we win the bet, we will track the profit and always let the profit track the profit. Then move its stop line continuously. If we lose the bet, we will stop loss directly. So when we are executing the function strategy exit in the gadget, an additional loss parameter is added and assigned it to a stop loss price, that is to say, after entering a market. Instead of stop loss, we continue to check stop profit, which is equivalent to a semi-automatic tool. That is, After entering the market manually, let the program do the subsequent operations according to the established stop-loss price and move some parameters of stop profit, and it will avoid the constant marketing watching after entering the market. That is, this is a semi-automatic entrustment tool to reduce the pressure on us to watch the market. Similarly, this function probably realizes according to the function strategy exit. Of course, we can specify a price. If we don't want to enter the market immediately when the strategy starts, we want to assign a lower price to it and specifying and wait until the price is reached. Then we can also commission the specified price by specifying the parameter limit in the strategy. For example, in this example here, we set the price at 1270 and go long for entry. The strategy will only execute the long entry operation when the price drops to 1270 here. In this lesson, we focus on how to add profit and loss stopping functions to existing strategies if we have a relatively simple supertrend strategy. And we can copy the last strategy code and paste it in our code editing page. And save it. We have a relatively simple supertrend strategy. If we want to add the function of tracking profit stop and loss stop to the strategy, actually we can just add the code. We can see this code, which is mainly to judge that if it is in the real-time K-line bar stage, and we set the custom function find order index. It can find the corresponding entry long position, that is, the entry long position is open and it is greater than 0 if it has entered the market at this time and has opened positions, and we set the status to 1 at this time. That is, the current position is opened. We will judge whether to go long or go short at this time. That is, we will judge strategy position size is greater than 0. Or less than 0 to determine whether we hold the long position or short position currently. Then we can specify the true price according to the situation. Then we set the tracking stop profits for the entry long position, and we assign the value to the parameters corresponding to true price. True offset. Then we will wait for long position to enter the market, either stop loss or track the stop profit. In this way, we add the function of tracking stop profit and stop loss to the strategy. We click Save. Then we click Backtest. Since the backtesting takes a long time, and we will omit the intermediate time here, we look at the test results directly in our chart. During the strategy backtesting, we can see the transaction logic of the strategy, a profit and loss chart, a position chart, and some marks on the transaction signals. Our strategy is actually a relatively simple strategy, which is similar to the super trend strategy we talked about in our previous course. It also uses the super trend indicator to trigger the entry signal. After the trigger, we set a tracking profit stop and loss stop for its entry signal. A function of tracking profit stop and loss stop has been added based on the previous super trend strategy. In general, the super trend strategy is to run on a relatively large K-line period, which may be better. If the K-line period is too small, there will be frequent false signals and frequent trend switching. Sometimes it is not accurate to judge the trend. If the period is small, there will be more mixed waves. After we talked about the strategy, let's talk about how to do it in practice. Because our course is mainly practical, after learning some basic concepts and knowledge, we'll use it in practice. Let's save the strategy and then create a robot directly. Of course, before we create a robot, we need to deploy a Docker. We still choose one-click rental Docker here. We choose Japan this time. Confirm. If you don't want to deploy it manually, if you want to test and use it simply, you don't need to deploy it by yourself. We just select a machine room and the region directly, and then we can deploy a Docker manually. But here, we also choose the one-click deployment. Then we need to configure an exchange. And here we have created the platform of OKX Spot. Since we have the strategy and Docker, we can run a robot after these three conditions are met. Here we add robot. We select we choose to use a private Docker here. We just create it and name it as test pine here. When we create a robot, we must use the private Docker. The strategy is the one we have edited. We named it as test pine. At this time, we start to set parameters, including ATR coefficient and ATR period. We focus on testing mainly without debugging. The parameter offset is mainly used to set the offset of the tracking stop profit and stop loss. According to our unusual grasp of the market, our habits, and the types of operations, we need to set the offset of our tracking profit stop and loss stop. And then we need to set it to bar model here. When we use the Pine language in practice, we need to pay special attention to the accuracy. That is, how much does the price per jump of the transaction varieties. If the price per jump of the transaction varieties is 1 yuan, we need to set the pricing currency accuracy to 0. Which means that the price ignores the decimal places. That is, the minimum price change is 1 yuan here. 1 yuan once, and its price per jump will change to 1 yuan. Because the price of some parameters is a point, not a direct price quantity, we should pay attention to whether the minimum price per jump is appropriate and consistent with our expectations. When some parameters we set are points, if we set the accuracy of the pricing currency to 1, its minimum price will change to 0.1 per jump. At this time, if we set the number of points to 30, the calculated offset will change to 3 because 30 plus multiply 0.1 equals to 3. Therefore, the accuracy of the pricing currency is very important. We need to set the specific price per jump according to the type of operation. If we want to run ETH USDT, we need to set it to a suitable price per jump. We can set it to 0 and let the price jump by 1 yuan. The precision of trading varieties refers to the initial place of the order quantity. If we place a single contract at a time, or order for 0.1 contract or 0.01 contract, the initial place of the specific order quantity is accurate to the number of digits. If it is accurate to 4, we'll write 4 here. And if it's accurate to the third digit, we'll write 3 here. That is used to control the precision position of the order quantity. After we have set these parameters, we can set the K-line period. We select 1 day here. K-line period. And then select the exchange object we have configured is OKX spot, and here the trading pair is ETH USDT. We must click this one and edit it to ETH USDT, and we click add here, add robot. We can see it was created successfully, and we can click the name of it to jump to the specific robot page. But before that, let's go back to the platform. Here we forgot the V5 protocol. This must be checked or it will report an error here. Let's go back to the robot page. We can click test pine. Here is the results of our strategy. You can see the chart of the robot strategy has been drawn out. That is a chart of super trend here. Then we can also see some information about the initialization of the strategy. In the status information column of the strategy chart, we also see the assets of the account, initial assets, available assets, initial assets, available assets, entry orders. That is, if at this time our super trend triggers an entry long position signal or entry short position signal, the order tag ID triggered, the direction, the average price, the highest price, the lowest price, the number of entries, and the profitability will be displayed in the entry order column. If we have some planned orders, such as the entry triggered by the super trend strategy, and then track the profit stop and loss stop planned orders, it will display the current plan commission in the planned order. Of course, the plan commission will also display the details of the plan commission, such as the trail price, the trail offset we set, stop loss price, and stop profit price will be displayed too. Of course, this strategy has not triggered the transaction yet. If the market is changing constantly, when the trigger signal is reached, the specific order will be placed and displayed in the entry order. In this way, we actually read our real exchange assets, and we will operate in a real way to achieve our program and quantitative trading. So that's all for today's lesson. If you think our video tutorial is useful, don't forget to like, follow, and repost. Thank you all.